In this video we are going to talk about dividend stocks with massive growth. So before starting, please like this video and subscribe to this channel for our future updates. In the financial world, dividend stocks are those that make monthly payouts to their shareholders, usually in the form of cash payments. When it comes to income, dividend stocks can be a valuable source of income, but the finest dividend stocks can also serve as excellent vehicles for building wealth over the long run. However, not all dividend stocks are good investments, and many investors aren't aware where to begin their search for high-quality dividend stocks. This in mind, the following are some dividend-paying stocks you might want to explore, as well as some of the most crucial characteristics to look for in high-yielding dividend stocks. The Dividend Aristocrats Index is a terrific location to look for high dividend stocks, according to the index's creators. Dividend aristocrats are firms that are both included in the S&P 500 index and have paid and increased their basic dividend for a minimum of 25 consecutive years, as determined by the Dividend Committee. Here are 8 of the best dividend stocks to consider investing in right now. Number 8. New Residential Investment Corp. NRZ. A mortgage REIT, Real Estate Investment Trust, is a type of real estate investment trust, real estate investment trust. It accomplishes it in a cost-effective manner, while also providing funding and services to the mortgage and financial services businesses. According to its long-term cash flow strategy, the company invests in assets that provide consistent cash flows over an extended period of time. In addition to mortgage service-related assets and other assets, the company's investment portfolio comprises non-agency securities, residential loans, and other investments that are closely related to mortgage servicing. Early this month, New Residential announced that it had reached an agreement to acquire Genesis Capital Llc, a business purpose lender that focuses on developers of new construction and associated projects, with a special emphasis on new construction and related projects. The purchase price was not disclosed at the time of the transaction. Genesis is expected to originate approximately $2 billion in loans by the year 2021, according to projections. According to the news release, there was no information supplied on the details of the sale, including the amount involved. The purchase is expected to be completed in the fourth quarter of 2021, according to current estimates. Number 7. Annaly Capital Management Inc. NLY. Residential and commercial real estate holdings are the primary focus of Annaly Capital Management, a diversified capital management organization that specializes in the acquisition, development, and financing of residential and commercial real estate. Mortgage-backed securities, MBS, residential real estate, and middle-market financing are only a handful of the assets held by the corporation. The company is believed to be in possession of assets with a combined value of around $94 billion. On September 9, the company stated that the board of directors of the business had declared a cash dividend of 22 cents per common share for the third quarter of 2021, which will be paid on October 1, according to the company. To be paid on October 29, 2021, common stockholders, who owned their shares as of September 30, 2021 will receive a dividend payment of 2 cents per share, prorated to the number of shares they owned on September 30, 2021. Number 6. Greif Inc. Jeff. Even though the construction company Greif is the smallest of the businesses on this list, it is a force to be reckoned with in the construction industry. This prediction was made by a firm that specializes in the production of packaging materials and containers. The company believes that it will be in the best possible position at the best possible time in 2021 to capitalize on its development potential. As a result of the increase in consumer demand, there has been an increase in the demand for boxes and other packaging materials of various types. As reported by the company, Greif saw a stunning 38% growth in revenue in the fourth quarter of 2019 when compared to the same period in the previous year, according to the firm. Aside from that, earnings were far greater than predicted by a significant margin. As a result of rising input costs, such as those linked with wood pulp, the sector has been presented with a number of challenges. As a result of these concerns, some firms have upped their prices, albeit Greif has been unable to match their competitors. To put it succinctly, Greif is well positioned to gain from historically high levels of retail spending by American consumers, as previously stated. In order to distribute money to its owners, The company uses a variety of ways, including the ones listed below. According to the most recent available statistics, the Jeff stock is currently yielding 2.6% on an annualized basis at the time of writing. Number 5. Target Nyse Tgt. When it comes to functioning in the highly competitive world of low-cost retailing, Target has continually proved that it does not need to compete exclusively on price in order to be successful in the business. The company has constantly surpassed its competitors in terms of profitability, and as a result, it enjoys some of the greatest gross and operating margins in the retail industry, which serves as evidence of its accomplishment. Concentrating on growing its internet business while also expanding its in-store product line has allowed the company to grow its revenues at a respectable rate while keeping its focus on growing its internet business, according to the company's financial statements. Target should be put on the list of dividend investors to consider purchasing because the company has increased its dividend for 49 consecutive years and is still increasing it. Number 4. Johnson & Johnson Nyse Tgt. A portfolio of strong brands that manufacture products that people require, specifically healthcare products, is owned by Johnson & Johnson, which is headquartered in New Jersey. Additionally, Johnson & Johnson has large and consistently profitable operations in pharmaceuticals and medical devices, which have allowed the company to raise its dividend for 58 consecutive years. These operations include well-known brands such as Band-Aid, Neutrogena, Tylenol, Zyrtec, Benadryl, and Johnson's, among others. With a diverse range of products ranging from consumer health brands to pharmaceuticals and medical equipment, this has proven to be a tremendous profit generator for the company. Number 3. Realty Income Nyse Smiley Face. For those searching for a straightforward strategy to invest in high-quality real estate for both income and growth, this could be the ideal investment to consider. The company possesses a diverse portfolio of properties that are largely resistant to e-commerce, and it generates significant cash flow from tenants who sign long-term leases. Realty Income is one of the newest members of the Dividend Aristocrats, having joined the index in January 2020 after achieving 25 consecutive years of dividend increases. Realty Income is one of the most profitable companies in the world, along with 50 straight years of paying investors every month. Number 2. Walgreens Boots Alliance Nyse WBA. It is currently undergoing a huge transformation at Walgreens, one of the largest retail pharmacy operators in the world. Among its ambitions is to reduce costs while increasing digital sales. Perhaps even more significant is the addition of full-service healthcare clinics in hundreds of its retail sites in the very near future. Being more integrated as a healthcare firm should help this already lucrative company become even more profitable, allowing it to increase its already generous dividend to even greater levels in the process. Walgreens stock has a dividend yield that is well above 3% at the time of this writing, as well as 45 years of yearly payout growth. There is a lot to appreciate about Walgreens stock for dividend investors. Number 1. Lowe's Nyse Low. The stock of the home improvement behemoth may not appear to be particularly intriguing. And that is correct unless you are a fan of dividend growth. The company has increased its dividend for an astonishing 46 consecutive years, and during the past decade alone, the payout has increased by a whopping 471%. The following is another crucial number that is favorable for Lowe's. The typical home in the United States is 37 years old. Lowe's will see a significant increase in sales from the next generation of do-it-yourselfers. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.